Yo, what's good, everybody? Y'all know what it is, man. It's another financial corner today. Yes, I am. It's been a few weeks, but today we just gonna try to get in there, talk about a few things, see what's going on in the market. As y'all can see, the S&P was down 1.9%. The Dow was down 1.86%. The Nasdaq was down 1.55%, and the Russell was down 1.92%. Now, all across the board, it was a rough day today, all across the board. So, yeah, and also too with the hold on, let me get set up, y'all, so I can see something. I want to make sure I can see all of you beautiful people. All right. So, Friday was a day that the market dipped, then it bounced back on Monday, and then it seemed like it dipped again today. So, with all the hearings going on with the Fed Reserve, uh, Janet Yellen with the finances, so, but it's gonna be interesting to see. I think there's like four countries that have closed their borders. I believe Australia, Japan, Morocco, and one other. I'm not recollecting right now, but with the new so-called Omicron variant that's been going on, there's been jitters through the market and everywhere else. So we'll see how this varies. You already had Pfizer and you know initiating the fact that they'll be obviously with everything going on with the vaccines and stuff. You're gonna have these companies looking in to see what they can do when it comes to coming up with something. So with all these different variants and whatnot, but we'll see what happens when it comes to the business side, the monetary side of everything. So plus with that being said, when you see dips in the market like this, I always say heavy drops like this is always an opportunity to buy at least a small portion. You know what I mean? Get yourself a little bit, then get yourself even more of a little bit, then even more. You know what I mean? So as of right now, shoot, I'm even tapped out because I've been trying to get into certain positions when it comes to companies. You know what I mean? Because one thing I will always say, even if a company is down, you still got dividends still rolling in. So I said this before a couple weeks ago in my portfolio, you know, if you look at the companies that survived all this, what happened in 2020, you know what I mean? You definitely want to pay attention to a company's cash flow and how they operate because you want to collect those dividends regardless. And obviously, I said it again last time. People need certain things. I mean, others are wants, but there's certain needs, and there are companies that give people those needs. So when you're looking at a company to invest in, you kind of look at the scope of how they can change the landscape, and also is this a need when it comes to the population in general. So you know what I mean. That's why I always say look into make sure you do your research. I'm not no financial advisor. I'm just doing what's best for yours truly. I'm just letting y'all know in my perspective and how I look at things. And and I always say, get invested. You know what I mean? It's just another way of financial security down the line. So, but let's go ahead. We gonna jump into this video, and we are going to listen to them talk about buying into the dips, what the crude is looking like, what inflation is looking like. So, all right, here we go.
Called Genuity Chief Market Strategist Tony Dwyer, who joins us now. Tony, great to see you as always. What do you make of the short-term levels, the fact that we went below Friday's low during today's session, and if that spells the likelihood of a bit more of a pullback still to come?
Well, if I'm more about the conditions than the exact level, I don't think in the world of algorithmic trading and quant and index funds, I think it's really hard to pick a quote unquote level like back in the day when I got into the business. So and the conditions that we're looking for on Friday were met. If you remember, we had upgraded the market in early October, and then in early November, I mean, you had optimism that was near all-time highs in the.
And also, too, what he's, they found out about the variant on Friday. That's why it dropped. And also, you have, probably almost the same jitters from Friday. It's the same thing that happened today, even though it bounced back on Monday. But, if you're looking at things long term, then this isn't an issue. You just stay the course, collect your dividends, and just, if there's more, you buy in. But when it comes to certain sectors, I guess if you're trading short term and whatnot, obviously, I mean, this is just, how you do it. So, but, when you have heavy drops all across the board, like I said, it's always an appetizing time to see what stocks you want to get into.
National Association of Active Independent.
And on top of that, the Feds might be looking to taper things quicker and raise interest rates a little faster with this going on too. So if this other variant becomes a problem, the Feds are going to have to move. The Feds are going to have to move faster on their tapering, and they're going to have to move a little quicker with their rising of the rates. So appreciate that host, Ash. You see what I'm saying? So
managers exposure index and other real active money management readings, and we said that if we get certain conditions that are oversold, we should have a pretty good year-end opportunity, especially given all the stats that you guys have covered so well throughout the last few days about what happens during strong years. So it would be historically unique since 1950 for the S&P 500 to be up 18% through the end of October and be negative on the final 2 months. The median risk is about 1.29% from the October close. We're now down about, 0.75% from that level. The median risk is 1.29%, and the median gain is 6%. So ours is a conditions versus risk reward. And Sarah,
as you see it right there, stock plunges on Powell's speed up taper comments. Well, this is why I say the market is so. A lot of people, don't get me wrong, when they say that the market is like gambling, just on the Fed chairman's, he says anything and the markets can react either way. But it's interesting because these companies, these analysis, they're not dumb. You see what I'm saying? They know if there is another variant coming out, that there is a possibility of a possible the world growth might be slowed, depending on how fast this variant is going. Is there going to be lockdowns again, depending on where? Is it going to slow the supply? Is it going to slow growth as it did in 2020? You know what I mean? So you have all these questions and everything going through a lot of these analysis heads because you don't know what's going to happen. You know what I mean? So the Fed comes out and says, well, if inflation is going to spike even higher, then we have to move quicker with the tapering and the interest rate hikes, because it's going to take a while for the inflation to come down. That is for a fact. It is going to take a while. So, like I said, $1 10 years ago is not the same dollar that's today. So, and as if you guys don't know already, I talked about this last time, even the IRS is going to change their brackets because of inflation. It's not because people are getting paid more money. It's because the inflation is higher. So regardless if people are getting paid more money, inflation is still going up, and all that does is evening itself out. That's all that is doing. You know, cost of everything is going up. You're getting paid more. You're not gaining any headway. See what I'm saying? So of course the markets are gonna react to him saying, well, look, we might end up doing this quicker if so and so, and then you see the result of that. But also as investors, like I said before, I will always say if you have a drop like this, it's always a good buying opportunity if you have cash on the side, depending on what you look at and depending on what you're looking at and depending on what you personally want to do when it comes to your own personal investment strategy. So
people like me come on and say we want to buy the dip, and then the dip comes, the conditions are met, and of course there's something that has a fundamental feeling of change. I think it's good to buy the dip for the year-end opportunity, given those conditions in the history of how the year ends in strong years.
Yeah, if it ends on if the years end on just the market's going down, then of course it's a good buy. All right, let's look at the crude.
Hey, Lou, Angie forget her phone again?
Yep. Lou, Mom said she could save up to $400 on her wireless bill by switching to Xfinity.
All right, Ray Dalio. Actually, we're watching that one next down the line. Actually, let's just X out of that one.
Check out crude oil getting crushed today, hitting its lowest level since August as COVID fears put a damper on demand yet again. WTI is up.
So crude was at 80 something. Now look at that drop. Wow.
Since March of 2020.
Wow.
What do you make of the action today? It's interesting how we go from releasing oil from the SPR to now worried about demand.
Yeah, and I wasn't a big fan of that release, and I think on some level it really showed structurally where we actually may still have supply issues. I'm not worried about demand, and I guess you have a dynamic here with COVID that I realize we've had some headwinds, but ultimately demand is not the issue on the energy side. We've talked about Biden's policy on energy and why that's ultimately great for fossil fuels. It may not be great for the future, but it certainly worked in energy's favor. You're down almost 20% on Brent. This is, November hasn't traded through the 200-day as it did today.
Dang, that's a heavy drop right there. Y'all see that drop? Man, oh man, it was at 80 something dollars. So now, right, a lot of people are gonna wonder, well, if oil is dropping like this, shouldn't the gas prices drop? Man, what's going on, Nora? What's happening? Smiley, what's going on, y'all? Yes, I'm actually looking at y'all comments on my phone, so I can make sure I read y'all stuff, because I don't see the chat the way I have my little deal set up. But yeah, what's going on, Nor? Yeah, with the small changes, but yeah, they're gonna change the brackets, but not really much anything else when it comes to certain things. But like I said, that's only due to inflation, really. So, but yeah, as you were saying before, food prices and everything is going up, but yeah, see, you would think, right? That's the catch. You would think gas prices would drop if you see oil drop this steep. Now, mind you, when it was 80 something dollars, if you look at the chart, right? You look at when it was at its highest, almost $90 a barrel, right? I think California's gas price is like $4, $5 a gallon, somewhere between there for those people living in California. Even though the price drops like this, I guarantee you it's going to take, by the time you think gas prices are gonna drop, the oil is gonna go up again. Because if we have a bad winter anywhere in the United States, I'm gonna tell you right now, if cold hits Texas anywhere, if cold gets too bad anywhere on the East Coast, not just Northeast, but anywhere where it's usually warm and it gets cold at, and, anything like that happens to Texas again, this ain't gonna mean nothing. This ain't gonna mean absolutely nothing, because your heating bill is gonna go straight through the roof unless you got a wood burning stove. Like where I'm at, people use wood and stuff like that. So, you know what I mean? Yeah, Smiley. Yep. But you would think, people would think that, well, if oil drops off this far, that, well, gas prices should follow. Like, it takes a while for the lag between when oil drops and when gas prices drop. It is such a lag. And even if by time that lag gets here, due to the fact that it's winter, man, usually winter you have cheaper prices, except if you're on natural gas or if you're using propane to heat, obviously. You know what I'm saying? So, but the price at the pump isn't going to change that significantly. You know what I mean? So let's see what else they're saying.
Energy is way oversold here, and I would be looking for my spot.
You see, he's talking about it's way oversold. So right now, right? If I was an investor looking to get back into energy right now, if I was a trader, like what he said, he's looking to get in now because he knows that, you know, if there's gonna be a bad winter, that price is gonna go right back up. You see what I'm saying? So right now is almost a nice little prime opportunity to buy in on that sector right now. Me personally, I was overweight in that sector. So, you know, when it was like at $80, when it was at $80 per barrel, like I sold some of my energy stocks and I used it to buy, you know, I got into IBM. So, and even though IBM is on the backslide somewhat, I still think IBM, and I will always say that I think IBM and Intel would be a great comeback story within 5 to 10 years. Everything we do is going technology, no matter what it is. Everything is almost leaned heavily on technology. So, you know, when you have, you know, two of the biggest names when it comes to technology, you know what I mean? They're not the best in their sectors, by no means are they. But, you know, they're still solid companies and they can still make a run down the line, especially from now going forward due to the chip shortage. And like I said, Intel is building a whole new area. You see what I mean? So well, see, when it comes to the pipeline, I'm reading your guys' comments. Now, when it comes to the pipeline, it's because you had people didn't want the pipeline running through their lands. You know what I mean? It had there's a lot more behind it than just, you know, them stopping the pipeline. You had people that didn't want that pipeline going through a certain area. So, but to be fair, I mean, even if that pipeline was even done, in my honest opinion, it wouldn't have made a difference. Like, it would have been years down the line, if that. You see what I'm saying? But the world is trying to, you have companies that are trying to find alternative ways to energy. I don't know if y'all heard about it yet, but you have some rumblings going on about nuclear energy, nuclear plants. You know what I mean? Having nuclear, because in hindsight, having a nuclear plant now, and I know some people, y'all think about Chernobyl and all that, but when it comes to nuclear is clean energy. It does run longer. You know what I mean? It can definitely have an instant impact on the grid. You see what I'm saying? So, I mean, it is what it is, but, you know, that is right, Ash. Everything, yeah. We're going to be like, what is it? Terminator. The world is going to be like Terminator or in Will Smith's iRobot type deal. That's what it's looking like. But let's see what else. Is that it? Okay. All right. So we're going to go to the inflation and see what the experts are talking about there. Like I said, we're going to be on till about 7:30. Well, until we finish these last few segments.
Said earlier today, if you read that as a meaningful policy change from the Fed and what it means for stocks.
Well, it was not only meaningful, it was long overdue. Remember, the Fed doesn't want to shock people at the meetings. It softens up the market. And what you saw today was we're going to go to a faster taper. I am sure that Powell has been getting an earful over the last 7-8 weeks about what, temporary and, what are you doing about the inflation? And I think he and the other FOMC members in telephone conversations have said, we just have to act faster. And he's doing the proper softening up of the market for that faster taper on the December 15th meeting.
But maybe, is it too late, Professor Siegel, where maybe it's not necessary anymore, especially if we have this new variant that could potentially evade vaccines, which what the market was down on?
Now, when I watch these videos, right, some of them I've seen before, some of them I haven't. But to answer this question, what she just said, is it too late if this other variant is going to put a shock in the system if they actually taper quickly? Because mind you now, they're trying to slow down inflation on top of this new variant. Now, the Fed was speaking for like 2 hours and change today. I didn't even watch the whole meeting. I didn't even get to watch any of it because I was at work. But now the Fed is in between a rock and a hard place. Because if, let's say, and it's a if. See, there's a lot of things that are ifs right now. You know what I mean? When it comes to what's going on with the new variant and the markets. But one thing is for sure, what Fed is trying to do, the Feds are trying to cut off the inflation because you don't want inflation too high. Everybody knows that nobody wants to pay $20 for a hamburger. Nobody wants to pay $7 for a gallon of gas. And if we don't watch it, it's already $5 and change in certain places. You see what I'm saying? So they're trying to slow down inflation, but unfortunately, like I said before, this inflation is going to be around for a while, couple years. My opinion, couple years at least, if not longer. Because if this new variant does put another shock in the system, if, like I said, if, you know what I mean, it might cause inflation to go even higher. You know what I mean? So, it's a very, very murky waters right now with what they're trying to do. I mean, the government already put out so many millions of dollars in aid in 2020, maybe billions of dollars in aid in 2020. You see what I'm saying? With all the advance this money and that money and this money and that money. In my opinion, if this thing comes across and it's bad or worse, I don't think the federal government can afford to do it again. That's just my opinion. You know what I mean? And I'm just looking at this from a monetary view. I'm not trying to scare nobody or no crap like that. I'm just saying, well, what if this happens? Well, this is a possibility. But let's hear what the experts have to say.
Ahead of this news earlier today already?
Well, Sarah, I've been on your show and saying way back 6 months ago, 9 months ago, that they should have ended taper, that there was too much money, liquidity, stimulus, and they had to be much more preemptive. We're going to have the inflation we're going to have, but it's better late than never. But I still think inflation is going to be with us for much more than a year, and going to accumulate far more than the Fed even thinks right now. So there's going to be even more hawkish turns in 2022.
Now, in that deal alone, what he just said was, see, if inflation lingers around, that means things are just going to stay more expensive, meaning food, meaning housing prices are still going to stay higher, meaning commodities are still going to stay higher. There is no chance of those prices dropping within the next few years, which is something to watch for. Hence why, the worth of the dollar is not the same, is not going to be much if they keep printing money. You see what I'm saying? So this is why I said earlier, before I even kept playing it, that I don't think the Feds is going to be able to, if this next variant kind of sweeps, if it's kind of anything worse, I don't think they can afford to print any more money. I don't think they can do that. Hence why he said they wish they would have tapered earlier, to do now to control the inflation. So if this does come across, maybe to see what would have happened, but I think personally, hence why, man, look, it's gonna be rough out there for everybody. Hence why, you gotta find that hustle somewhere, find that, that side hustle, that's something extra, you know what I'm saying? Because it is going to get rough. You know what I mean? We all know that one job is not cutting it these days. Everybody's working like 2 or 3 jobs, depending on how you want to look at it. Some people got investments, got other things going on that supplement having another job, but you always want to make the money do a lot of the heavy lifting versus you. You see what I'm saying? That's why I try to encourage people to find a financial advisor, invest, get into some dividend stocks or something where you are getting back some type of return out of your investments somehow. Little is better than none. You see what I'm saying? So, all right, let's go to one of the icons of investments, old Ray Dalio. Let's hear what he got to say.
This morning that beyond thinking about buying your book or thinking about whether they should be invested in the market, putting more money in the market, and I'm thinking about
this is true, Ash. Now, you are 100% right. And this is why I think electric vehicles are going to be limited to.
I think that just the way you.
If you ask me, to city driving, not long distance.
To say, here's the stock market, and I'm going to time the movement into the market. I'm going to time the movement out of the market. Okay, you know what that means? Okay, you're going to guess what the next variant move is. And what the next other thing is. A lot of things depend on a lot of other things, and the world and everything readjusts. What has to happen, I think, is investors, most importantly, have to realize 2 things. First, that cash is not a safe investment, is not a safe place, because it will be taxed by inflation. There will not be an interest rate.
Y'all hear that? Oh, I hope y'all heard that. I hope y'all heard that. Let me play it again for y'all. Oh my gosh. Yo, what's going on, Flex? Am I back on? Am I back? Hold on, y'all. I want y'all to hear this. Y'all gotta hear this. Y'all got to listen to what this man just said. Nor, if you in the chat, Ash, all y'all listen. I already know Nor knows the deal. Ash, if you guys are in the chat right now, listen to what this man is saying. Best believe this.
That cash is not a safe investment, is not a safe place, because it will be taxed by inflation. They will not.
I will say this again. You heard what he said. Cash is not a safe investment, because when it comes to inflation, it's going to be worth less. You feel me? The banks don't even pay you. When you have a savings account and you have your money in a bank, you're not even earning barely any kind of interest on that money. You see what I'm saying? Now, this dude here he's one of the icons when it comes to investing. You see what I'm saying? Like the book, The Intelligent Investor, the one that I'm reading, you know what I mean? It echoes a lot about cash. You know what I mean? If you notice, people that are investors, they don't have a lot of cash like on hand. They have residuals coming in from their investments while they have cash. But it's not like they just don't put that cash back into their investments. You see what I mean? Because the more they print money, the value of that, the value of the dollar is less, as I said earlier, not too long ago. You feel me? So
not be an interest rate that will anywhere near compensate. And it seems good because it's not volatile, but you're paying a tax of a few percent a year on that. So A, stay out of that. And then B, know how to balance a portfolio, because the way portfolios work, it's almost like for some part, something happens another thing happens. In other words, what you can see in the markets today is that, let's say, when equities go down because growth expectations falter and there's a greater likelihood of easing, then you see the bond market go up. And when you see other markets, gold, you're seeing, watch the market action on every day, and you could see those relationships. Wealth is not destroyed as much as it is transferred. And if you know how to balance those investments, we do it in what we call an all-weather portfolio. But if you know how to balance those investments, that's the most important thing. Be in a safe, well-balanced portfolio. You can reduce your risk without reducing your return.
Now, when he's talking about a well-balanced portfolio, when I always talk about, if you don't care to do any kind of research, if you're just looking to get invested and you just want to make sure you have steady growth and you don't care, as long as you have steady growth and your portfolio is growing, the best way is ETFs, obviously, just putting a blanket on the whole market. Like I said before, VOO, SPY, covers the whole S&P. You know what I mean? I think it's like $400 and something a share or something like that. Obviously, you can do fractional shares. You don't have to buy the whole share, meaning that you can just put any kind of dollar amount in and you can be invested. I am always critical of this. You don't have to have a whole lot of money to be invested. Like this man just said, having a bunch of cash laying around, once inflation hits, the dollar's being devalued. You see what I mean? So if you have investments, AKA, if you're doing like rental properties or something like that, where you have residual cash coming in, or, you have, commercial buildings where you have tenants in there and you have residual cash coming in, then you're turning it into the market investments where you're getting residual cash, So, and that's what they're talking about, why the wealthy stay wealthy is not because that they have a whole lot of cash on hand per se. It's more of their assets, what they own, what's giving them that residual flow, that consistent monthly cash flow. You know what I'm saying? Who wouldn't want to have a $200,000 consistent cash flow off your investments? You see what I'm saying? Then you take that money, you just put it right back into something. You know what I mean?
And you will not market time this, because even if you were a great market timer, the things that are happening can change the world, so it changes what should be priced into the markets.
Hey, Ray, one of the things you do write about is China. Some would argue that you have a generous or more sympathetic view to China than perhaps some of the most hawks, if you will, about China. But you think that there's sort of an inevitability to the transfer of wealth of sorts?
Well, okay, two things. China, transfer of wealth. I just know China very well, and I come as a perspective, with a perspective as an investor. I've been going there since 1984. I know leaders, and I know how they're thinking, and I know the moves that they're making in a detailed way, and I'm just trying to share what that perspective is. Because
it's interesting he says that, because the other person that I know that speaks about China like that when it comes to investments is Charlie Munger. In my mind, you know what I mean? That's the only other. Well, like I said, I'm not big in the investment community and keep up with all the names and yada yada yada. But ever since, I do watch the videos, you know what I'm saying, and everything. I do read the books here and there. I do pay attention. But when it comes to China, for sure, him and Charlie Munger, when they talk about China, is something interesting.
Because I think a lot of people make stereotypical moves. And I think you have to really understand. First thing you have to understand, because it has been a remarkably successful place. Since I started going there in 1984, per capita has increased by 26 times and so on. So to not understand it or to approach it with a great bias is a great disservice. Okay, in terms of the element of, let's say, a transfer of wealth, or let's call it common prosperity. Yes, there's a world, in this world right now, there's a move to common prosperity. I think that that move, what does it mean at a technical level? That's not take your money away, but here, I would say what are called progressives here are much more left than what we would call progressives or whatever the Chinese policies are doing. But yes, worldwide, there has to be common prosperity, or let's call it broad prosperity. And the question is whether that's going to come about by productivity or not. It doesn't mean that you're going to have like a communism that's going to take all of that.
All right, let's end him. But there we go. Let's move on to the next deal here. The tapering and what these guys think about the speeding up of the policy.
We have a few unknowns, and the market doesn't like unknowns. Or the new COVID strain obviously is a big deal. It's a big unknown. We have now a more hawkish Fed, but I think you have to listen to what the Fed is actually telling you, what Powell is telling you. He's telling you that while we don't know about the new COVID strain, we do know that we have higher than expected GDP and much higher than expected inflation, and that they should be tapering sooner rather than expected. And I've been talking about that for months now. So now in the next 2 weeks, we get a bunch of data. We get more details on the COVID strain.
Hope you guys are looking to the left. Let me go back. Let me go back over here.
More details on the COVID strain.
If you guys look on the left, right, the little green stuff that pops up on the left before it closes, those are the stocks that she has going long at. I always pay attention to these analysis, and I watch the majority of stocks that they all have, and I will kid you not, 99.9% of them all have the same stocks in their portfolio. When it comes to hedge fund companies, when it comes to financial institutions, every single one of them dang near has 99.9% of the same stuff in their portfolios. No lie.
We also get inflation data, PPI, CPI. So if the data strain news is positive, it's a big if, and it's a big, fingers are crossed, and you get hotter CPI and PPI inflation data, I think that they should be tapering. So now you step back and you say, we have to wait for more details. And I'm waiting for more details. We're all waiting for more details. But if you completely wait, you're going to miss some great long-term opportunities. And then I step back even further. I say we have medicines out there that exist, that work, and more are coming. We have a very high vaccination rate in the U.S., 70%. So I don't think you're going to see closures. So that's why I do want to look for opportunities. And I have been looking for opportunities. I've been buying a couple of names slowly, carefully, number one or number two in their industry, quality balance sheets, good free cash flow, and proven management.
Y'all hear that? Everything that she's talking about is the same things that I look for, that I hear every investor analysis, what they read in books, what they talk about. What a lot of these financial companies that have these millions of dollars and they have to make sure that they give a certain percentage back to people, they always look at, like she said, number one or number two in their sector. You know what I mean? They look at the balance sheet, the cash flow, the management. This is why when I look at certain particular stocks that I have, and when that stock drops, I get in because of these principles. And yes, when we do have these financial corners, I talk about the principles a lot, the basics a lot, because the basics and the principles are the building blocks of having a steady, balanced portfolio. Like I said, if you really don't care about, who, what, when, where, and why, just purchase the whole S&P 500. That's it. You don't even got to think about it. You see what I'm saying?
Teams. And I think you can get a whole host of companies on sale right at this moment.
Okay, so you bought Apple and Amex on Friday to underscore the point that you're saying. And I hear you with Apple. I mean, it's one of the few stocks that's holding up real well today, and it's not all that far from its high. Amex a little trickier. We just don't know what the environment's going to look like moving forward.
You don't, but it's down 13% in 2 days. And we do know that leisure travel is better than 2019 levels. We know business travel is slow to recover, but that's a 2022 story. And I think it will be.
See, these companies can afford that $152 a share.
Investing in their businesses, building out customers. And I think if you get demand that comes back, what I'm betting on, then you're going to see operating leverage in 2022, meaning higher earnings from here. The stock trades at 17 times forward. So I'm making that bet that you are going to see a recovery and not
17 times forward is not bad.
And I have a lot of reopen names, but this is definitely one of them, and that's why I'm buying small. I'm adding to it on the small side for now.
All right, y'all. Y'all heard what she had to say Definitely for the last few days, there's been a discount with the drop between Friday and today. You know what I'm saying? So, but you know what I mean? That is it. And I hate when I get cut off like that, man. Ugh, when the stream just stops all of a sudden for no reason. But that's it for another Financial Corner. Hopefully everybody, you know, enjoyed the session that we had. Like I said, you know what I mean? Look for the opportunities in the market when they are there. You know what I mean? I never buy things that are at a premium. I always, you know, if I'm looking to get into a particular stock, I will wait. I don't care how long I gotta wait. I will wait. You know what I mean? And I always say dividends is king, because regardless of what's happening in the market, every quarter I'm getting that churn out. Every quarter I'm getting my little pennies. You see what I'm saying? So, but I appreciate y'all coming through for another Financial Corner. Y'all be safe. That's it for your boy. If y'all got any questions or anything like that, if I don't know the answer, then I'll definitely lean you to somebody or somewhere that knows, that has the answer. You know what I'm saying? Y'all know y'all can hit me up on that IG. You know what I mean? Hit me up on all the socials. If you guys haven't checked out the store, actually, before I end it, let me show you guys the store real quick. Let's get the store up here. I will be adding some more things to the store tonight. So just gonna give you guys a glimpse before I get off here of what's in the store. For all the anime lovers, if you're looking to get a gift for an anime lover, look no further. Like I said, I will be adding quite a few things to the store tonight. I will be adding possibly some more hats tonight, I think. If not tonight, then definitely this weekend. I think these are all the snapbacks I have right now. Oh, I still got a few down here. There we go. You guys a glimpse of the store, what to expect. This is what we have in the plush throws, the blankets so far. Of course, the wall scrolls. I'm looking to get more of these wall scrolls hopefully this weekend. Hopefully. Of course, we'll go to the drinkware. We got a lot of mugs, heat changing mugs. So a lot of good stuff, a lot of good stuff. Of course, I do have for those who like Death Note, a Death Note mug. I don't know why that picture does that like that, but now I do have complete sets as well. I am trying to find and add more complete sets. So if you're looking for a complete set, look no further. And of course, nothing will be complete without the main deal, the filet mignon. A lot of figurines for those who are looking to collect. I have a lot of figurines and more even on the way. So actually, I need to take out one of these figurines because it actually sold. So, but yes, as you can see, a lot of figurines, a lot. So, but there it is, y'all. Y'all be easy. Y'all have a good night. Stay safe. Appreciate y'all coming through, man. Tomorrow I will not be streaming tomorrow. I'll be a little bit busy. I got more stuff coming in. I have to do my inventory. I'm doing a big show here on Saturday. So I need to make sure I have all my items, everything ready to sell. You know what I'm saying? Trying to show off my stuff, you know, see if your boy can make a little penny. So I won't be on tomorrow. I will be on Thursday. I will be on Friday. Like I said, Thursday we'll probably play some Mario Kart for a few hours. Friday I'll be busy. We might get into some 2K. I really need to make sure I stay on 2K at least for a little bit. So, and then of course Saturday I'm gonna be busy all day. That's gonna be like 10-hour day there. So, well, y'all, till next time, y'all be easy. Let's see. We gon' raid. We got some people in here today. Let's see who we gonna raid, y'all. Who we gonna raid? Let's get on this Twitch and see who we gonna raid, man. Only thing that sucks is I usually come here to do all the raiding. So let's see who we gonna raid, shall we? Let's see who's on to raid. Who is on like popcorn? You know what? Oh, yo, it's we gon' raid good friend of mine, brother Bareback. It's his birthday today. Make sure y'all show Bareback some birthday love, man. Hopefully it comes up. Oh crap! What? There he goes. He's right here. He's playing Halo Infinite. It is his birthday today. Make sure y'all show him some love, man. Three, two, one. Make sure y'all go through, say happy birthday, all that good stuff, man. That is it for your boy. Y'all know what it is.